Welcome back. It's another red week for the portfolio. We ended the week almost down $3,000. We started the week off really strong. Monday and Tuesday, we were up, more than $3,000 on the portfolio. Then Wednesday came around, market open, stocks absolutely tumbled. Thursday was pretty flat, and then Friday, stocks again tumbled into the close essentially. But I couldn't be more excited. This is essentially what I've been begging for, stocks to go down so I can pick them up at lower valuations. Because essentially, you know, I'm investing for the long term. So this is exactly what I want. I would want them to go even further down next week and the week after that. We also have a ton of news to cover, like Google releasing their Gemini 2.5 model, which is essentially beating all the other models. We have news that AMD gets another downgrade on, when they're being compared to NVIDIA essentially. So we'll take a look at that. We'll take a look at the AAII Investor Sentiment Survey again, look at what the numbers are now and just see how bearish investors are feeling. We'll also take a look at the PCE February 25 report. Essentially says core inflation in February hits 2.8% higher than expected. So we'll take a look at what that means and kind of compare it to, Truflation, see what we're seeing there. And then last we have this: consumer sentiment worsens as inflation fears grow. University of Michigan survey shows. And then at the very end, I'll share a brand new company that I added to my portfolio. This is a company I haven't held in a very long time, but now the valuation is just getting so ridiculously low that I have to buy. So stick around to the end to see what company that is. Okay, first up, we have this from Google. Gemini 2.5, or most intelligent AI model. Gemini 2.5 is a thinking model designed to tackle increasingly complex problems. Our first 2.5 model, Gemini 2.5 Pro Experimental, leads common benchmarks by meaningful margins and showcases strong reasoning and code capabilities. Gemini 2.5 models are thinking models capable of reasoning through their thoughts before responding, resulting in enhanced performance and improved accuracy. In the field of AI, a system's capacity for reasoning refers to more than just classification and prediction. It refers to its ability to analyze information, draw logical conclusions, incorporate context and nuance, and make informed decisions. And down here, they introduce Gemini 2.5 Pro. And down here, they show how the model essentially scored in all these tests and, based on these benchmarks. And they compare that to the OpenAI models, Grok, and DeepSeek, for example. And, pretty much all of these benchmarks, they're outperforming those models. I'm not going to go too much in depth on Google and this model here because I made a whole video on this and actually released that this morning. So this is the video. Go watch it if you have time. I think it's a really interesting video. I kind of dive into Google as a company, their different business segments, talk about the disruption of their business and why I don't think it's as serious as a lot of investors think. But what I want to bring up in this video here is years ago, people thought that Google was the leader in AI for a very long time until ChatGPT came out. And, in the past couple of years, past 2 or 3 years, it seems like they've been left behind, essentially. But now with the release of their latest model, it clearly shows that they're in this AI race. And it'll be interesting to see, how they use this model and what different services and products they can integrate it into and really get value out of it, just like Amazon is integrating it into pretty much every single part of their business. They have a lot of different segments, but so does Google. So I'm really interested in seeing how they use this. Moving on, we have the news that AMD gets another downgrade on tough competition with NVIDIA. This article says AMD is falling further behind NVIDIA in its technological capabilities, a fact that could continue to pressure the stock according to Jefferies, which downgraded the chipmaker to hold. AMD has considerable ground to cover before their products can compete, wrote analyst Blaine Curtis, who previously had a buy rating on the stock. NVIDIA's chips have, quote, a significant performance advantage over AMD's, and this gap should widen further with NVIDIA's upcoming product cycles, a sign of AMD's, quote, limited traction in AI. And here's the actual price target. Jefferies cut its price target on the stock from $135 to $120, putting it among the lowest targets of the analysts tracked by Bloomberg. The average target is about $145. AMD last closed at $110. So obviously AMD is my biggest position by far. It's like 25% of my portfolio. What I want to say is the data seems to disagree with the fact that AMD can't compete. Their data center revenue grew 69% year over year in the last quarter. Their overall revenue is growing really fast right now. And sure, NVIDIA has some chips coming out, but so does AMD. With AMD, we have the brand new MI350 chip coming out in mid 2025 that like 20x's the performance of previous chips. It remains to be seen how good they are compared to NVIDIA's latest chips, but what AMD can do is lower the price and compete on price. And just as a reminder, that's how they took over the CPU market from Intel. They essentially provided better performance per dollar spent. They say here that the average price target is $145, so that's pretty considerable upside from here, but I personally expect the stock to go much higher than that. And the thing with these analysts are they often follow the stock price. As soon as we see AMD's stock price booming, I bet we'll see a lot of upgrades where analysts are essentially following the stock price up. So overall, this doesn't worry me. I'll keep holding my very large AMD position. Okay, moving on to the AAII Investor Sentiment Survey. And as a reminder, this survey offers insight into the opinions of individual investors by asking them their thoughts on where the market is heading in the next 6 months. So if we look down here, the week ending March 26th, 52% of people were bearish. So we're still overwhelmingly bearish. And I bet, next week when this survey comes out again, after the massive drop, after the 26th, we'll probably move down in these ratings again. So recently I was watching Jeremy from Financial Education. By the way, if you've never seen any of his videos, go watch them. You'll learn so damn much about the market. Just go watch them. Anyway, he was bringing up this sentiment data and he was looking at the historical numbers, right? And he brought up the fact that, recently we've been sitting around 60% bearishness because of tariffs and because of the worries of inflation and recession, right? You have to go, or if we go back to the 22 crash, right? When the Federal Reserve was hiking interest rates, raising interest rates, we were seeing similar bearishness numbers. Before that, in another period in 2022, we were seeing similar numbers. If we scroll a little further, the COVID crash, even then, when the entire worldwide economy was essentially going to get shut down, people were not as bearish. If we go back even further, let's see, 2009, great financial crisis. Yeah, we had 1 week of 70% of people were bearish on the market in the next 6 months. But even the weeks around that, people weren't as bearish as they are now. In 2008 as well, around the same levels then. So I wanted to bring this up because back then you actually had worries about the Federal Reserve raising interest rates. Rates are already high right now, and they're talking about lowering interest rates. And if we look at the inflation data, it has cooled down significantly. And if we look at Truflation, which gives a more up-to-date view on the economy, we can pretty much see that inflation is dead. So this whole game doesn't have to be complicated. Just buy when other people aren't bullish on the stock market. If we look at those previous periods, 22, 2020, 2008, 2009, have been incredible buying opportunities. And, in the broader indexes, we really haven't seen those prices since. Of course, this isn't financial advice, and I'm not telling you to buy, but I'm more referencing, the famous Warren Buffett quote and saying that it doesn't have to be complicated. Be greedy when others are fearful, and fearful when others are greedy. And others are fearful, so that's why I'm stepping in and buying every single week. And not just my weekly buys, but I'm also making outsized deposits and buying even more during these, negative times. So moving on, let's look at inflation. This article here says that core inflation in February hits 2.8%, higher than expected. Spending increases 0.4%. And as always, just to get a quick rundown of, what the numbers were, I like to watch this CNBC segment. So let's do that.
What's going on, Rick?
Well, there's a lot of big numbers in the rearview mirror on spending and income that were really shocking last month. So we want to see if we reverse some of these trends. And it's hitting the wires, Joe. February income, spending, and PCE. Expecting the income number to be up about 0.5%, maybe up 0.4, double that, up 0.8. And up to now, no revisions yet. That follows up 0.9. Up 0.9 last month was 1-year high. Let's add in 0.8. This is solid back to back. Now, if we look at the spending side, last month at -0.2, that was the first negative number in 2 years. It was the biggest negative in drop in spending in 4 years, but we reversed it to some extent, up 0.4, about as expected. And if we look at real spending adjusted for inflation, last month, -0.5%. That was the first negative in a year, the biggest drop in 4 years, but yet we reversed that, but in a smaller way. Adjusted for inflation, up 0.1, up 0.1. And now let's take a look at the PCEs. We'll start out month over month, expected to be up 0.3, comes out at 0.3. If you look at year over year, expected 2.5, it comes out at 2.5. If we look at the core now on a month over month, expected up 0.3, a little warmer, up 0.4. That would be the warmest going back to, wow, I'm going to have to go. That'll be the warmest basically in a year, January of 24. And finally, if we look at core, year over year, expected 2.7. It's a 10th warmer as well. 2.8. 2.8 will be the warmest going back to, well, the end of last year we were 2.86. So this one remains sticky. Revisions coming in now. Okay, I'm going to go slowly here. The income goes from 0.9 up to 0.7 last month. The -0.2 on spending gets a little bigger, -0.3, but we reversed it. And -0.5% on the real spending number goes to -0.6. So we see that some of the takeaways from revisions were a little bit less on the positives, a little bit more on the negatives. But all in all, I think it's a pretty good report. Now, even though we had some slightly hotter PCE numbers, we see that yields are moving down. Now, 10-year yesterday had a 1-month high close going back to the 24th of February. Here we are right now hovering at 431. At 431, we're -5 basis points on the day, but we're still up 6 basis points on the week, and that's something to pay attention to, especially considering the steepening of the curve we're finally starting to see. We're back about 35 basis points, 10s to 2s. Joe, Becky, back to you.
So that was the report. As they said, a little hotter than expected, a little higher than expected, but still nothing to worry too much about, as they mentioned. One thing I like to do is look at Truflation, which, the data they include in their calculations is a little more up to date. It can provide, sometimes be a predictor of, where these PCE and CPI reports are heading in the next few months. So if we look at Truflation, I have this on a 6-month here. If we look, that report was from February. Truflation was also somewhat elevated in February, but at the start of March and throughout March, we've stayed under that 2% inflation rate. So it'll be interesting to see next month when CPI and PCE comes out. It'll be interesting to see if it truly follows Truflation. And, the Fed follows those other, PCE and CPI reports. So if they're convinced in the next couple of months that inflation truly is dead, maybe we can start seeing some cuts. But overall, I think it's pretty much just going to end up being the Fed is still going to wait and see what happens. They're going to need to see a more substantial move downward in the hard numbers, the hard data, those PCE and CPI reports. Okay, moving on, we have the news that consumer sentiment worsens as inflation fears grow, University of Michigan survey shows. So they say here that the final version of the university's closely watched survey of consumers showed a reading of 57 for the month, down 11.9% from February and 28.2% from a year ago. Economies surveyed by Dow Jones had been expecting 57.9, which was the mid-month level. It was the third consecutive decrease and stretched across party lines and income groups. consumers continue to worry about the potential for pain amid ongoing economic policy developments, the survey director said. They go on by saying economists worry President Donald Trump's tariff plans will spur more inflation, possibly curtailing the Federal Reserve from further interest rate cuts. But what I like to remember here is that this is measuring how people feel. And, we've seen a lot of swings in the markets, both the upside and the downside, and people's feelings get in the way of their financial success. And often these issues are blown out of proportion. Okay, that's it for news for this week. The entire market right now is pretty much just waiting for April 2nd to hear the whole tariff plan from the administration and pretty much see how bad it's really going to be. What I like to do, whether we're going through good times or bad times, I like to put myself in a position where I have more income coming in than expenses so I can buy regardless of the market situation. And I think investors who do that are going to look back 3-4 years from now and thank themselves. As I mentioned earlier, this game doesn't have to be complicated. And, a lot of the professionals are saying that at this point, a lot of the fears have already been priced into the market. So I'm just buying when others are fearful. And I'm doing these outsized deposits and buying a ton of shares right now. And specifically, this is what I bought. So first of all, I do my 500 weekly, regardless of anything. But this week I also did another $3,500 deposit to, take advantage of this weakness. And what I bought with that was, here's the new position, Google, $2,500. This is currently the smallest position in the portfolio, but in the next coming weeks, I expect that I will continue to grow this one. I also bought some Cheesecake Factory shares at $50, 15 of those. I bought more ELF at $64. This stock just continues to be beaten down essentially, but it's a growth machine. It's only a matter of time until it booms again. So we'll see, how that happens, when that happens, if that happens. But if we look at the overall portfolio here, so obviously, as I mentioned, AMD is the biggest position, almost, over $18,000 in that position. And here is the rest of the distribution. Now, just last week, I was talking about Nike, right? And I was talking about the Nike weakness there. However, throughout this last week, I've been doing some more thinking. And with everything else crashing, and, Google, Meta, Uber, Amazon, and all of these great companies, trading at lower valuations and fair valuations, I almost feel bad holding a company like Nike because currently I see Nike as a turnaround play. So that means the next 2 to 3 years, I expect the stock price to recover as the overall business recovers, right? But after that, I'm going to have to wait and see, what the numbers are looking like. If I like the business and the business model at that point, obviously Nike relies pretty heavily on retailers and a bunch of stores that are in malls and stuff like that. When I could be buying stocks like Google, which is trading so ridiculously cheap, but it's such a powerful company and it has such a long runway of growth. And in my opinion, Google, once the market goes risk on again, it's going to be one of the first stocks that shoots back to $200 a share. So that's what I'm saying. Like when I'm holding a stock like Nike, I hold other companies like it, Cheesecake Factory, Elf, and Celsius. However, Elf and Celsius, the growth there is just so incredible that I see it as more than just a turnaround play. I see years of growth for those company ahead. The same with Cheesecake Factory. Historically, it's it has had a low valuation. However, with the company acquiring Fox Restaurant Concepts a couple years ago and really starting to build out the North Italia and Flower Child restaurant concepts, I see a ton of growth ahead for Cheesecake Factory, and it's a good dividend payer. So that's why I'm willing to hold that, even though it's a little more, capital intensive, unlike some of my other positions like PayPal, Uber, Shopify, SoFi, and so on. So to summarize, I'm still thinking about my Nike position. I might cut it, to be honest, because as I said, I just kind of feel bad holding a company like Nike right now when all these other great companies are, really trading at a discount. And if we just go, stock by stock here, I think AMD is a buy. I think Elf is a buy. I think Cheesecake Factory is a buy. I think PayPal is a buy. I think Amazon is a buy. I think Uber is a buy. I think Celsius is a buy. I think ASML is a buy. And I'm actually, I've been wanting to add to this one. Shopify, a little higher valuation there. I think it's still a hold for me. SoFi is a buy. It's trading down towards $11 again, so I might add more there. Nike, I think the company's going to do well. I still think it's a buy, but I just think most of these other opportunities are just better. And probably starting either today or tomorrow, I'm going to make my next video about which stocks I'm buying in April. So I'm going to provide a lot of updates on a lot of these companies that I think are buys and which I will personally be buying in April. But that's it for this week. I hope you enjoyed. Like the video if you did enjoy. I'll see you in the next one.